with the debt we're borrowing from the future, and with money we're creating claims against our future output. And that, I think, is a problem for all of us in the long run. Now, so far, policymakers have been able to get away with that, but I think that there is a point coming where we're going to have to pay for all that debt and all the money that we've created.
Thanks for plugging in to Rethinking the Dollar. I'm excited to have today's guest, Gervaise Heddle, the author and creator of the MoneyEnigma.com, sit down with us today to discuss the new economic theories as well as the nature of money. I'm sure you're going to find it to be very educational. Click the subscribe button below for more RTD interviews as well as monetary news updates. Enjoy this conversation.
Welcome to Rethinking the Dollar. Today I'm excited to have my guest, Gervaise Heddle. He's the author and creator of the MoneyEnigma.com and is the founder of Bletchley Economics. Mr. Heddle has nearly 20 years of experience in senior management positions across the global investment management industry, and currently he's joining us from Australia. Sir Gervaise, welcome to Rethinking the Dollar.
Thank you very much, Mike. It's a pleasure to be with you.
Well, I appreciate you taking time. I know you're currently located at the bottom of the planet, and so we had a little time difference thing and whatnot, but we managed to get together, so I'm looking forward to speaking with you. I know that at the MoneyEnigma.com, you go and you give extensive research on the subject of money with graphs and everything like that, so it's very informative, and I'm looking forward to diving into more of your research. But typically before I start off, I ask some RTD questions, and the first one being, what comes to mind when you hear the words Rethinking the Dollar?
Absolutely. Well, I think it's a great title for your website, and I must say that, Mike, that I'm very impressed by the interviews that you've done today. Look, I think that Rethinking the Dollar is a great idea in terms of challenging people's perception about money. So most people go through life without ever really thinking about the money they use every day. Basic things like, why does it exist? Why does paper money exist? Why does it have value, and what determines its value? And I think that your website provides a great opportunity for people to think about those issues.
Thank you. I appreciate that. Now, how important is it for citizens globally, for the most part, to begin taking interest in monetary policy as well as just basic financial literacy in dealing with their own financial, aspects?
Well, look, I think, Mark, everybody has a civic duty really to know something about finance and basic economics. I mean, not everybody can obviously be an expert in economics, but I think everybody that needs to know something about their government and how the government is going to fund the things that the government promises. So when a politician gets up there, as they are now in the current presidential election, says, well, I'm going to do this and I'm going to do that, people should have an understanding of, well, how is that going to be financed? Is it going to be financed by taxes or the issuance of government debt or the creation of money? And what is the economic of those various actions? So I think it's very important for people to think about these issues.
Right. Now, currently you're in Australia, and I know that the Australian dollar is kind of going through some things as well as, other currencies globally. Now, if you were given a chance to be at the podium and this was all TV stations nationwide zoomed into you, what would your global state of the economy address entail and why?
Well, look, I think firstly, there's a lot of things to be optimistic about. If you think about rising levels of education across the world, technology and innovation. I spent the first 10 years of my career as a technology analyst on Wall Street, and there's a lot of wonderful things going on there. A lot of great work being done by people, and our society is becoming more efficient, with the use of the internet, etc. So I think there's some good things going on. The problem is there's also a number of bad things going on. And the big issue for Western society, and particularly the United States, is that I think that we've been living beyond our means now for several decades, really since the 60s, or maybe really the 1970s. And, you're seeing that through rising levels of government debt, particularly as a percentage of GDP, which is the metric that really matters. And you're also seeing that through rising levels of monetary base. So you've had this incredible monetary base expansion around the world. And so really with the debt we're borrowing from the future, and with money we're creating claims against our future output. And that, I think, is a problem for all of us in the long run. Now, so far, policymakers have been able to get away with that, but I think that there is a point coming where we're going to have to pay for all that debt and all the money that we've created.
All right, and that point I think you're referring to, does it have anything to do with possible collapse, or some analysts say monetary reset or things like that? Is that kind of what you're heading towards?
Yes, look, I think at some point there's going to be what I would call a great debt for equity swap, which is a lot of the government debt that's been issued is going to have to be swapped into the equity of society, which is I see as money. So in essence, we're going to have much higher levels of permanent money base, and that will inevitably put pressure on the value of money. So the value of money will fall and prices will rise. So you have higher inflation, you have currency crises. And, these things, these create very bad outcomes for real people. If it's, when suddenly the price of milk is, $10 a gallon, $10 a litre, that's going to be a real problem.
Right. Well, now let's dive into the Money Enigma. How did the moneyenigma.com come about? You do a great job of, as I mentioned, talking about money. Like you give more in-depth about the subject of money than I've actually ever learned myself. So I'm looking forward to getting your take on that. So how did you actually get into, blogging and things like that on your own?
Well, the actual site itself was launched almost exactly a year ago, but the work behind the site started a long time before that. So the site originally and even today is quite theoretically focused. So I'm interested in questions regarding the nature of price determination, the nature of money, the role of money in price determination, and then all the issues surrounding that, such as inflation, hyperinflation, why do currencies collapse, etc. So my interest that really drove that initially, and then now, a year into it, I've received a tremendous amount of support from various people, and so it's something that I hope to continue doing.
Right. Now you have a unique form or concept behind the Bletchley Economics. And can you get into that, and how does that differ from Austrian as well as Keynesian economics?
Sure, certainly. Well, I was trained as an economist, so I received first-class honours in economics at the University of Adelaide, and then I've spent my life in financial markets really thinking about a lot of the big macroeconomic issues. And I guess that part of the reason the Money Enigma came about was because I didn't feel that any of those major schools of thought really had a good grasp on key issues such as the nature, how a price is determined, and why does money have value. So the Austrians have a view, the Keynesians have a view, then you've also got the monetarists and the fiscal theorists, and they all have valuable roles to play. But what I've tried to do is bring their work together in a way that I think makes more sense, and I've done that from the ground up, building a microeconomic model of price determination and applying that to the macroeconomic level, and then also thinking about the nature of money and why does money have value. So I wouldn't say that I'm necessarily an Austrian or Keynesian, but I draw from both of those traditions.
Interesting. Now let's get into what is money and how is money? How does money determine? How do you get value from money?
Sure. Well, I think if you look at the paper money that we use today, to understand why that money has value, you really have to go back in time and think about the evolution of money. So you start with, in the old days, money was almost anything, seashells or grain or rice. But then over time that migrated to metals such as gold and silver, the precious metals. And then the first paper money that came along was essentially a contract that promised you the delivery of gold and silver. So the kings of the day said to their soldiers, look, we'll give you this piece of paper, and what this piece of paper guarantees is that when you get back from the front, the king will give you gold. And then, of course, those pieces of paper started circulating because they were promises by the king or the government to pay gold. So you can understand why that paper money had value. What the strange thing is that at some point, that explicit promise was dropped. So when the gold convertibility feature was removed from money, suddenly you couldn't just present your paper to the treasury and get gold. And so my view is what happened is at some point the explicit contract that governed paper money was replaced by an implicit contract. And while it's quite technical, my view is that in essence money became an equity instrument and represents a proportional claim on the future of our society.
Interesting. Now, how as fiat money has become the norm now, do you foresee any time in the future where sound money or precious metals will be brought back to redeem some of those claims, or what's your thought there?
Well, I think that over the next 10 years, there's going to be a real test of faith in fiat currencies because the central bankers have created an enormous amount of new currency. The government's created an enormous amount of new debt, and everybody sort of believes that that will all be fixed eventually. That the monetary base will be reduced, the government debt will be somehow reduced, but I'm not sure that it's going to be that easy. And at that point, I think people's faith in fiat currency will be tested. the value of many of the major fiat currencies will decline. And at that point, I think you will hear more noise from people saying, well, gee, maybe we need to go back to a gold standard and put something behind that currency. I'm not sure that will happen, even though maybe in some extreme cases that will. But look, I think that, you know, gold and silver will play a more important part in people's minds over the next 10 years as people search for alternatives to fiat.
All right. Now, being that the show is called Rethinking the Dollar, let's get into some of the dollar-denominated things now.
Sure.
United States being the most indebted nation on the planet for the most part, how does the national debt here in the United States of America affect the value of the claims, Federal Reserve notes that's out there, and what's the outcome of that, you think, you know, between the debt and the paper attached to it?
Sure. I wrote a piece about this. I've written a couple of pieces, but I wrote one called Government Debt and Inflation, maybe about 5 months ago. Look, my view is that money is, in essence, the equity of our society. So if you think about a corporation can issue debt and it can issue equity. Equity is the shares of common stock you see listed. Now, if a corporation issues too much debt, then that ultimately will have an impact on the value of its equity and the value of its shares. And I think it's the same at the level of society, which is if our society issues too much debt, in other words, if we issue too much government debt, then that will also ultimately have an impact on the value of the equity which we issue, and that equity is the cash that we carry around in our pockets. So at some point, people will, if there's too much government debt issued, people will lose faith in the economic future of our country. And the problem is that fiat money is only as good as the society that issues it. So if people lose faith in a country, then they will start to lose faith in that money, and the value of that money will decline.
Now, is there a such thing as too much debt, and when is there a complete, you know, when is it, you know, just too much to where either people wake up or confidence is lost? At what point do you think where enough debt is just too much to continue to pile on?
Look, it's a very complicated question because for some countries that have very small and cyclical economies, too much debt could be 40 or 50% of GDP, and we've seen currency crises occur in third world countries where they've had, you know, 40% or 50% government debt to GDP. At the moment, the US is at 100%, Japan is at 300%. Now, you know, 30 years ago, you said, well, 100%, 200% is too much, but these debt levels of debt have kept growing. So I think that we're playing a dangerous game now. We're approaching a point where we're really trying to test the theory, and, you know, really we don't want to be testing the theory, because if the policymakers keep issuing more debt and sort of, you know, in essence, flipping the coin and hoping that they stay lucky, there's one day we won't. And so, you know, I'm concerned that we are approaching that point in the Western world. Certainly, I think Japan is very near that point. There could be a collapse in confidence in Japan, you know, at any time, really, because that country is, in many ways, effectively bankrupt, I think, at this point.
All right. Now, with the increase in debt, one thing I noticed is that, you know, I guess the central banking concept is to monitor and to hit an inflation target. Now, how did the whole idea of a central bank, predominantly speaking about the Fed now, have a mandated target of 2% that they're shooting for? And then, you know, the official statistics say it's not 2%, but then you have external sources that say we're well beyond 2%. So, I mean, how do you gauge inflation, and how does that become a part of our monetary system, to shoot for inflation?
Well, look, I think the original mandate for the Federal Reserve was, in essence, to protect the value of the dollar. So if you think about the history of the United States, it went through some periods where, you know, for example, you had the Continental, and that declined dramatically, you know, in value because there was too much spending. And, you know, I think that the primary aim of the Fed should be to protect the value of the dollar, and, you know, you assume that money's maybe going to decline a little bit over time, but to protect it. Now, this whole business about inflation targeting and what's the right level, I think that they're trying to be too cute in a sense. I don't know that the Fed can really say, oh, we're going to manage inflation to 0% or 2% or 4%. I think that's trying to be too clever, because the value of money is actually quite volatile. The Fed's been lucky that the value of money hasn't collapsed suddenly over the past few years, I think, given some of the actions they've taken. And, you know, I don't think they want to be too cute about it. I think they just need to do the right thing to protect the value of money, and fundamentally that means not increasing the monetary base at a rate far in excess of the economy's ability to grow real output. and that should be the thing that they watch more than anything else, in my view. I think this 2% thing is a bit of a distraction.
Right. Now let's talk a little bit about the Australian economy. How has, I guess, some of the policies and things that our Fed here has, put in place kind of impacted your country, and give us the idea of the health of your economy down in Australia?
Sure, absolutely. Well, just first of all, in terms of Australia, we are in many ways the lucky country. We've got incredible natural resources and a good education system. So Australia's done very well, really, over the last 20 years. We had a boom in mining about 4 or 5 years ago, and that created a lot of employment and a lot of growth. But that boom has ended now, obviously, with the problems in China. And so now the mining-oriented economy is going through tough times, but the rest of the economy is doing okay. Our economy is very heavily influenced by the Fed, as is every other major global economy, because the Fed really sets the cost of capital for business. If you think about it, there's a global cost of capital for any person trying to start a business, and that cost is set, well, certainly the risk-free rate is set by the Federal Reserve sitting in Washington. So what the Fed has done over the past few years is really pushed that cost of capital down as far as they can, and that's helped people start businesses, do more investments, and has certainly propped up the prices of assets. The question is, what happens when the Fed ultimately has to normalise policy and allow that cost of capital to rise? And I'm concerned that it's going to hit businesses, but also in countries like Australia and Canada and UK, it's really going to hit our property markets, which have been really pushed up by low interest rates.
Right. Now, speaking of Fed and interest rates, I guess this month is supposed to be a big month where they are expect to move a few basis points. Do you foresee that, and will that be a good thing to happen this year or next year or down the line, or do you see it going negative? What's your thought on the whole interest rate stuff?
Absolutely. Well, the Fed has put this off for a long time. So if you go back to the beginning of last year, 2014, there were people who were absolutely certain that the Fed was going to raise rates by the end of 2014. It didn't happen. Then at the beginning of 2015, there were people who were certain that the Fed would raise rates in June and then September. That didn't happen. Finally, now everyone is certain that the Fed is going to raise rates here in December. And I think finally they will. I think the Fed realises that they just can't defer it forever. And in many ways, they need to save face and be seen to be doing something. If they keep deferring it, people are going to start asking tough questions like, well, what's the Fed really doing? Are they still in control? Why has it been so long? I mean, it's been 9 years since we last had an interest rate rise. I mean, that's an incredibly long period of time. Right. And I think they just have to do something now. But I think the broader picture is that the interest rate actions by the Fed distract from the real issue. And the real issue is is the size of the monetary base, not only in the US but in all the other countries. And we have created an enormous amount of money over the past 7 years, and that has to be reversed. And if it's not reversed, I think there's going to be dire consequences for the dollar and for the inflationary outlook. And, the Fed's gotten away with it so far because they've said, look, we're going to reduce it one day, but one day has to come, and they do actually need to start reducing the monetary base.
Now, if they reduce the monetary base, would not, I guess, take us into the deflation territory, which is a part of, what central banks are afraid of? And so would not create problems within itself?
Well, possibly. I mean, I suspect it will add extra pressure to the real economy, so you'll get some, deflationary pressure from that. But, frankly, a little bit of deflation is not the end of the world. I mean, we're not in a deflationary environment now. I think a lot of people sort of think that deflation is synonymous with low growth. It's not necessarily. Some of the greatest growth periods in the history of the United States were periods where prices weren't going up or were actually declining slightly. So there's nothing wrong with deflation per se. The problem we have as a world at the moment is we're so indebted that deflation creates problems with all the debt that we've created.
Right.
So, look, it's a difficult situation, but on the other hand, Mike, if they don't start to reduce the monetary base and inflation takes off, I think inflation's a much worse scenario for the Fed than prices falling a couple of percent a year. Because if prices start rising 5 or 10% a year, then that is really going to smash financial markets, and we're going to return to a situation that will be similar to the said 1970s or worse.
Right, interesting. Now let's get into some of the things that's happening, outside the United States. As of last couple of years, you mentioned that been in 9 years of, for most part, zero interest rate policy type of things. A lot of countries out west, predominantly the BRIC nations, have began, I guess, making plans. They've, as I call it, they've been rethinking the dollar for a while now, and they're beginning to do some things on their own to, I guess, prepare for something. What do you think all the activity with the BRIC nations, is all about in reference to the dollar, especially?
Yes, well, look, I think, China and India and those sort of countries and Russia, they're not stupid. They, particularly in the case of China, China's run major trade surpluses with the US. So the US has had a trade deficit with China for many years. And so there's all that US money going to China, and China's just sort of sitting on the US dollars and US treasuries. But I think the Chinese are sanguine about the prospects for the United States and the ultimate outcome of these experiments that we've been doing with monetary and fiscal policy. So I think that, a lot of those countries are hedging their bets and trying to make sure that if, there is a problem with the US dollar, that they are protected to some degree. The problem is that, today the US dollar is the reserve currency. It's not likely to change anytime in the immediate future. But I think they are trying to prepare themselves.
All right. Now, you don't foresee the dollar, losing its reserve status anytime in the near future, but do you think a lot of these movements are in preparation for it, and also like with the renminbi being added to the SDR basket? I mean, how do you think all that will play out?
Well, typically, if you look at the history, the world's reserve currency tends to be the currency of the most powerful, most economically powerful nation in the world. So there was at one point, it was the British pound, and then the US dollar. And I think that, it's very hard to make these bets, but looking ahead, it's not hard to believe that, 100 years from now, China will be the most economically powerful nation on earth, and therefore their currency will be the reserve currency. But I suspect there's going to be a huge period of turbulence before that occurs, and at some point, possibly gold will play a greater role, the SDRs will play a greater role. I'm not convinced about the SDRs, but maybe the precious metals will play an important role in the transition period from the US dollar as a reserve currency to some other reserve currency.
Now during the whole transition process, what will the dollar look like? Globally, will it still be utilized in trade, just not as much? And then, if those dollars aren't being utilized and they come back to the United States, give us some scenarios on how things could play out with, $2 million back home.
Sure. We might find at the margin some people start using the US dollar less in trade, but I still think there'll be a huge role for the US dollar in trade. The bigger issue will be just the decline in value of the US dollar and possibly the volatility in that value. If there's a real crisis regarding the economic future of the United States, then that's when the value of the currency starts becoming very volatile, particularly in a downward direction, and that's going to create a lot of problems for for banks and people to do business in the US dollar. So it also creates a problem for ordinary people who just have US dollars sitting in the bank and in their bank account. Suddenly those dollars just won't be worth as much in real terms.
All right. Now I would like to shift gears a little bit. Talk about a little bit of the euro. Just because I hear a lot of things, but I never looked into it that much. And I know that there's a few countries within the Eurozone that are at zero or currently already in negative territory, to where depositors at certain banks are now being charged. And do you see that becoming a widespread thing for all countries that are near zero? In order to keep things going, they have to break it below zero, which it affects the depositors? Or what's your thoughts there in regards to the banking sector?
Well, I hope that all these central banks are going to do the right thing and start the normalisation process. And as they do, interest rates will rise, and this experience of negative deposit rates will start to disappear. That's if they do the right thing. If they don't do the right thing and they leave interest rates down at these levels, then yes, you're going to continue to see more negative deposit rates. And I think it's the negative deposit rates is just a symptom of a broader problem, which is the central banks have really skewed the financial system so much now that things are happening that don't make sense. It's very easy for people to get money to invest in speculative businesses, say in Silicon Valley, etc. And then savers who've worked all their life, it's very hard for them to get any sort of sensible return on their money by putting it in the bank at the moment. I mean, you just don't get any interest. So you've got these incredible skews, and I think they're creating dangerous imbalances now.
Yeah. Now, for the average investor, saver, if your bank isn't giving you any money on your savings, how do you go about, where do you put your money? How do you handle your finances in hopes of it, lasting a little bit longer than you, or being able to actually have something down the line? What would be some suggestions or advice that you possibly can give those that, don't know what to do and how to, prepare for the future, depending on how uncertain it is?
Well, the first thing I'd say is everybody's circumstances are different. So, ideally you should consult your own financial advisor who can tailor a plan to your own circumstances. And you want to find a financial advisor who understands the benefits of diversification. You want to diversify your assets across various areas. And but look, it's a very difficult time because in essence, the expected returns from most asset classes have been pushed down to such a level it's going to be very hard to get a good return on almost any investment, whether it's equities or bonds, government bonds, corporate bonds, or cash in the bank. It's very hard to get any sort of real yield. I don't know what the best advice is. Personally, I do advise people to have some money in gold and silver. And, the commodities more generally are probably interesting now. They've been through a horrific bear market, and I think there's opportunities starting to create there. But, people should have diversified portfolios, and they should, seek advice on that.
All right. Well, Gervaise Heddle, I appreciate you sitting down and, sharing your expertise with us. Can you give the audience a way to, follow your work and to just stay in tune with what you have going on?
Absolutely. So you can follow my work by signing up for the weekly newsletter at themoneyenigma.com. You can also follow me on Twitter at themoneyenigma.
Sounds good. Well, I look forward to staying in touch with you, and definitely would like to sit down probably in the future and get into some more detailed things. I think you've got a great perspective, and I'd love to dive into more of your theology, rather. Not theology, but, your viewpoint on economics.
It's a bit like that. Economics is a bit theology.
Oh, man. Well, thanks for sitting down with me. Enjoy the rest of your day, and we'll stay in touch.
That's great. Thank you very much, Mike. I appreciate your time.
Well, this concludes my discussion with Gervaise Heddle. Hope you found this to be very educational. I want to encourage you to visit themoneyenigma.com where you get a chance to see more of Gervaise's work. Also, scroll down below, leave us a comment. I would love to hear your thoughts. And if you felt this was informative, feel free to click the share button. I'm sure your family and friends will love to be educated. Other than that, looking forward to bringing you more interviews. Until we meet again.